shortly after 7 o'clock. I'll call the August 26th meeting of Old Colony Planning Council to order. First item is a roll call vote. So Sandra, you want to do roll call?
I'm ready. All right. So Abington. Avon.
Delegate.
Bridgewater delegate. Brockton.
Delegate.
Duxbury. No. East Bridgewater. Easton.
Delegate.
Halifax. Hanover. Hanson. Kingston. Pembroke. Plymouth. Plimpton.
Delegate.
Stoughton.
Delegate.
West Bridgewater.
Delegate.
And Whitman.
Alternate.
Okay.
All right, thank you, Sandra. We've got a quorum. All right, this meeting is accessible to people with disabilities. Microphones or telephones will be used by all speakers. Large print materials are available upon request. If you would like either of these accommodations, please contact Mary Waldron at 508-583-1833, extension 202. The Notice of Non-Discrimination Rights and Protections to Beneficiaries with regard to Title 6, non-discrimination protections, and the state non-discrimination protections is posted in this meeting room and is available on the Old Colony Planning Council website. Please contact Mary Waldron, 508-583-1833, extension 202 for more information. All right, thank you. So we've got that business out of the way. So Mary, were we taking people out of order today and going to the presentation?
We are, and we have on today, we have Barbara Howard and Brian Callow from Rockland Trust. Barbara, if you could take the lead, make an introduction of yourself and Brian, and I'll be Vanna and moving along the slides.
You make a great Vanna.
Appreciate that. Thank you very much. Brian and I are both excited to be here. It's been a while since we've met with your folks. Brenda had reached out to me. So again, we're excited to be here. So the presentation that we have in front of you, I'm hoping we were sent some questions. So hopefully our presentation should cover most of them, but if not, please feel free to ask questions as we go along or at the end. We shouldn't take more than a half an hour of your time, as we had said. So again, I'm Barbara Howard. I am the relationship manager on the account. I manage all of our municipal business. And then Brian Callow, who is the portfolio manager, and he's the one that does all the investment side of this. And he will be taking you through the performance of the portfolio. So with that, Mary, if you could turn us to page 2.
Yep.
So there's a quick agenda. I'm going to go over the administrative review. Brian was going to go through some market commentary. He'll go through the performance, and then if there's any questions, we will also take you through the portfolio. So that next section you can see there is the account information, and all the information here provided is as of July 31st. So the council actually has 2 separate accounts. We're going to focus tonight on the OPEB account, but there is a money market fund that had a balance as of July 31st of just over $100,000. The OPEB account has a balanced objective, and again, Brian will go over that as part of his presentation. The market value as of July 31st, you can see there, was $733,000. The next section there is you can see the transaction history over the life of the account. So the account was opened in 2012. Actually, it was opened in in 2012. And you can see the additions that have been made over the years. So as of year to date, the totals that have been provided to the account are $555,000. And again, that's versus a market value on July 31st of $733,000.
Oops, you just froze.
A question had been posed to us, 4,048 on the next 500,000 and 3 on the balance. So based on the current value, the annual fee is 60 basis points.
And if I could just,
Any
Barbara,
questions on this page?
can I ask, I muted everybody just for right now, just because sometimes the background, does the council, let me unmute everybody. Do we want to go through the presentation and then go back for questions? Is that the will of the
Yeah,
council?
we can absolutely, if you think that would work better, absolutely.
Well, if I may, I think sometimes you get so far in, then you forget what page we're on. I think if there's a question, I'd rather hear it as we're going along myself. I don't know if everybody's
Okay.
in favor of that, but sometimes it's harder to find the page that you were on, you had a question about.
Go ahead, Sandra.
I do actually have a question on this
Yep.
particular page. And I don't mean to cut you off, Sandy, but I think we were thinking the same thing, and it's a little confusing the way the wording on that sentence is laid out. The structure of the fees, is it
Mm-hmm.
0.6 is sort of the average or the net effect of this, or is it 0.66
Yes,
it
plus
is.
0.48 plus? Okay.
So as the assets grow, they'll leverage the fee schedule and essentially increase on a decreasing basis.
Okay. So on 500,000, I mean, we're paying, $3,300 as the fee. And then on the next 233,000, we're paying 0.3%. I got it. Okay.
No, 0.48%.
Oh, okay. Okay. Yep. Because you're in the next 500,000. So if we went over $1 million, it'd be 0.3 on that.
So I guess
Correct.
what's the total fee?
I didn't do the calculation there. Give me 2 seconds, I can do the calculation.
What's the question?
The total fee.
Oh, well, one thing, it changes each time because we do it on the market value. So that way, if we only did it on 12/31, then it would always be, if markets rise more than they go down, the fee would be higher. But certainly, so you want to know the monthly or the annual kind of rate where we're going at right now?
Yeah, about monthly.
Yeah, so it's
About $366.
That's it? Yep.
Monthly.
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 Oh, yeah. Yeah. So overall, it's about, if the market was, if the market value was to remain flat, you'd pay about $4,400 for the whole year.
Okay.
Okay. Thank you. Any other questions? I don't know. Anyone else on this?
Okay, I'll take you to the next page.
I think
There's not a lot
Bob, did you have a question about the fiduciary?
of information here, listed here.
Yeah, I'll ask that one at the end, Sandy.
Okay.
I think.
All right, so this is where Brian takes over on his market commentary.
All right. So sorry, Bob, but did you have a question you want to jump in before rather than holding it to the end? I'm happy to answer anything.
Well, yeah, maybe it is appropriate because I think it carries through the whole presentation. And the question would be, as a council, as board members, what is the fiduciary obligation of the board members? I mean, what is the intent or the, what are our responsibilities and obligations as fiduciaries? And particularly in the selection of funds, I would think there would be certain areas that would be very risky, that it would be inappropriate for public officials to select very risky funds, for example.
I'll start with this, Brian, and then you can jump in. As far as the fiduciaries, particularly on your OPEB fund, it's doing what you're doing. It's in selecting the investment manager, meeting with us to make sure that we're meeting your IPS and doing what you're expecting to do. It's working with your actuaries and your auditors, again, to make sure that you're on path for the expectation of the funds. And so as far as when you're mentioning choosing the actual funds themselves, that you have delegated to us as the investment manager. So again, it would be working with us to ensure that if there is something within the portfolio that you think is inappropriate, we would have that discussion. But we manage money for various local municipalities, so we're very in tune as to what those are.
Yeah, so if I could reiterate some of that and also dovetail it. As board members, you're given the task to be fiduciaries, to be good stewards of the funds. And so, as Barbara said, that goes with managing the funds, but also making sure that your actuary's on the up and up, the accountant, et cetera. One of the good points, I'd like to say there's a lot of them, but one of the good points of hiring Rockland Trust is, as a trust company, we come with fiduciary standard as well, which means we essentially carry on your responsibilities the same, as opposed to some of the brokerage houses, et cetera, that have a suitability clause. Like they'll just say, all right, it is investment management's a whole different, I guess you'd say, arm of it, if you will. It just is supposed to have something that's suitable or okay for you. We carry on that same fiduciary, so we have to make sure that we are doing everything that is judicious and really just growing. Everything we do is for the growth of the funds on a risk-return basis. We're essentially making sure that for everything we do that it's a level of risk, that it's get the return for taking that risk. For OPEB funds, how that translates a little bit is that it's a diversified portfolio. So you get to invest in, everything. And when they say prudent man, if you will, it's what an investor at that time would invest, a professional would invest in at that time. So there are slices of more risky assets, and then there's larger chunks of what I would call much more stable or the core portion of the portfolio. And those are meant to be in the portfolio and essentially react to create return over time, but certainly the time series, the return series of each of these, many of these asset classes occur at different times or different segments of the market cycle. So therefore they end up decreasing the overall risk of the portfolio.
If I could just jump in here for 1 second.
Sure.
I do want to put in a disclaimer that this is a conflict for me, so I will abstain from any votes or anything pertaining to this.
I'm sorry. I didn't fully hear that. Kim and Love.
Yeah, Sandy, you're a little bit quiet, but I can repeat it, saying Sandy's going to be abstaining from voting on any of this just because of for clarity purposes and for protection of the potential conflict of interest.
Okay, great. Forgive me 1 second to stand up. My cleaning people just showed up in my building, so I'm just closing the door.
Good timing.
Okay, I think that basically answered the question that I had about fiduciary duty. And that is that we're in line with each other on that, and we're acting appropriately by hiring you to act with a similar set of guidance. And we're not stepping outside of taking on more risk than would be appropriate for a public agency. Yep,
and the in one of, I guess you'd call the guardrails we have in this process, which is nice. It's a little, it adds cost to it, meaning the actuary. So every 2 years, this plan gets analyzed from the actuary to see where how we're performing, or how the, I should say, how the assets are being growing, whether it's through contribution or through our investment. And so with conversations either with us or you through the accountant, and we would always, as long as it's comfortable with you, is to open up that relationship with, and we actually have a good relationship with your actuary, but to open up that conversation, so that way we can make sure that we're managing it to the discount rate that they're assigning to your assets, and we make sure we're growing it in line to the final goal. And again, the good part about that is it happens every 2 years. So we set all these blueprints in the beginning, knowing that things could potentially move as we go.
Right, that's helpful to know. I think one of the questions that we had at a finance meeting was also we would look to have a more frequent discussion with Rockland Trust, if it's every 2 years or every year, just to see where it is, just to see where our, where things are performing. So it's just a little bit different than things have been, but we'd like to kind of have that kind of a little bit more open dialogue, number one. And then number two would probably be, one of the things we're researching is with our other regional planning agencies, how do they, how do they have their accounts? And perhaps maybe you can talk a little bit about other entities that you, that are like us, that you manage in terms of your experience.
Sure. So the first part, I would submit that at a minimum, it should be annually. So we, as a group, we've let it slip a little. We're just kind of turning over, some board from when we started. We should come down there and go to the office. That's my favorite. I'm sorry we're not all together. That's I love investments and I love analyzing everything we have. But the interaction with people when we're managing their money is a special part of this for me. So it's great to at least see faces. We were on conference calls the first 2 months of it, I think.
Mm-hmm.
So it was the first part, and the second one. I apologize, I went too far with that.
That's okay. Like organizations.
Oh yeah, so we manage money, and so for a lot of municipalities across the Commonwealth, and one thing I will say is, you see it a little bit with either revenue producing entities such as utility plants, or some what I would call agencies or quasi agencies, collaboratives, etc. You're more in that range where your funding rate is higher than most just the towns and cities. It's a lot harder for the towns and cities because they have so many employees and they've had them for so long. Where you have less, you've got a pretty high funded status, and that allows us in, because I think it flows into some of the other questions that we have, because usually when I'm sitting in front of a town and they are a balanced objective, which essentially means you're like 55-45 stock to bond ratio. We tell them that this is a nice place to be, a nice place to start, get buy-in for the group, and make sure everyone's on the same page as you continue to get contributions. But ultimately, the actuary will drive us to a spot where we have to take on more risk exposure because we need a higher discount rate or a higher expected return of the assets. Because of your funded ratio, I don't think we'll ever have to go there. We'll be able to stay at this balanced level. And I don't want to say, I said I don't think we'll go there. I won't guarantee it. But overall, I think this mix will get you, because where you're, essentially where you've been, the discount rate that's been being used for you is essentially in line with what this objective will actually realize through time, or I believe it should. Historically, it's actually been higher, so there's even a conservative measure involved. So I don't think we'll necessarily have to go to have more risk exposure in the portfolio, which is nice. A lot of times when people say that, one of the other questions you had is, there is a time when we would change our allocation. If we were balanced with a lower funding ratio, or I guess that part would be, is if you took on multiple employees or grew somehow, that you had a lot more of a liability, or your healthcare inflation rate went up some, then we might have to act that way. With the process in place and in the fund in place, we shouldn't have to. The other side of that, though, there's not really a situation at this point where you can say, oh, we can take chips off the table or get less aggressive or get more conservative because of that same item. The way this sort of works, and I apologize if you guys are already well versed in this, you've got a liability at the end of this that we have to make, or we have to pay healthcare and other benefits for employees through their retirement and through all their years of usage of healthcare. And so the actuary goes through and says, okay, given this, given what you have for a plan, or what we have to pay out, or we expect you to have to pay out, let's calculate that, make sure we have the liability right, and calculate what your healthcare costs are going to be, what the inflation rate of those costs are going to be. And then we have to discount it back at essentially an assumed return rate. They made it a little, a couple of years ago, Gadsby, which is the government standards board, accounting standards board, essentially made it a little more complicated, where they said, you know, where you have your assets, we're going to assign the allocation of the long-term expected return of the assets you hold. And then where you don't, we're going to essentially line you up with a, you know, a 20-year municipal bond rate, essentially an interest rate just to muddy the waters right after they told everyone they had to start saving. So I didn't like the timing. Actually, the process is fine, but I really didn't like the timing because they were just pushing everyone on. And I'm sorry, I'm going too far with it, but it's really important that what we will do is continue to work with the actuary. But when you get, say you get close to fully funded, people would say, well, I can get more conservative now because I have the money. But the problem is we funded it on the assumption that we had a discount rate, a stated discount rate. So if we get more conservative, that discount rate will lower because the expected return of the assets will now lower. So therefore, and you think of, you know, the present value, now the liability just got bigger. So that's why we'll probably end up going the course or potentially, you know, several decades with this type of plan, if that makes sense.
Yeah. And recognizing that we have a lot left in the presentation. I didn't mean to take you away from finishing the presentation, but I do think we want to keep going. So thank you.
Yeah, so I'll keep going, but what I will say there is that I'm happy to talk about the market anytime, and I'm actually, we'll zoom into any of these meetings if you ever want to hear from me. But those items of how the plan's constructed and the questions of the group that you sent us before about allocation are really some of the most important things we can talk about. I will talk, and again, I'll, you know, whether we're talking about lemonade during work, or if you want to meet for another cold one or something after I'll talk as long as anyone wants to talk to about the market value. But that's what's just going on now. We're talking about investing a plan that is a multi-decade event. So really the items that all of you just asked us for questions are the backbone of this trust or this plan. Because if you don't get the allocation right in the discount rate and know your liability stream or the future liability of it, you're not playing in the right field. You know, you're playing hockey in a softball field, and it's just not going to work. So market stuff, I'll jump into now, but I think those were really well warranted questions. So real quick, the first one was the stock market. I put it up there because it's, I think we all knew about what, you know, if you look in that March area, the market had been running up nicely. We all heard kind of what happened with COVID. And I harken back to the fact that we are on a Zoom call, not in front of each other. And if we were in front of each other, we'd probably have masks on, to see that the stock market is back up. So essentially past the levels that we start, and this is September, so sorry, this is through June. If you go July and August, because we have a quarterly snapshot here, my apologies, we're actually above where we started the year. So given that, people get, you know, there's a lot of consternation saying, Brian, the stock market's back where we started the year. We can't even meet. I can't go to, you know, just a pub. I have to make sure I serve food. You know, all those things that we're wrestling with. What gives? It's one thing that I almost applaud investors with right now is usually when things look bad, the stock market drops automatically without thinking of the type of, or if there's going to be a recovery. At the end of the day, stocks are really just the present value of future earnings. So the earnings they're going to get, you do a mathematical formula and you come back and say, okay, this is what the price should be. So they're coming out and saying, okay, we're not, capitalism isn't gone. We're still going to spend. We're just going to spend it. We're going to push it down the road. We're going to spend some to keep us going, but we're going to get back on our feet. So that's why you see the stock market come back where it has. And also the fact that what was really in this, a lot of small businesses hurt. And I don't want to downplay anyone that's hurting during this period, either, you know, from an individual standpoint or business. But from the broad scope, the Fed came in and made sure the capital markets were open for businesses, and so then by performing that, the markets were open, and therefore things weren't going to go out of business. The large companies in the economy, and then the government stepped in and said, okay, we're going to give unemployment, we're going to give this special CARES Act bonus, if you will. And so people had money in their pockets to spend as well. So by doing that, the stock market essentially said, we're hurting, but people are still moving forward right now, or they're not. Yeah, they're paying their bills, and then on top of that, we have the future that we think we're going to get. So as representative municipalities, I put this next one in the yield curve, and you can see the different years and times of this, but essentially, I'll just go drill down right where we are at the end of June, because we're right back there in August. That's what the yield curve looks like right now. Rates are extremely low. Where I sit right now, you got a 2-year bond at 0.15, 10-year at 68 basis points. It was actually 71 most of the day, but 0.68. You can see how much it's come down just from this time frame last year. So last year we were talking about a flat yield curve and what was going to happen. That's that, if you can see the colors, that olive green in the middle. And now it's the blue one, so there's no interest rate. So we don't worry. We feel for municipalities right now that a source of their revenue is from all their cash that they hold. Because that's one thing, municipalities have a lot of cash that they have on hand for free cash, general funds, etc. And their returns are down on their cash holdings, though their investment holdings really haven't performed that poorly. So that would just show the yield curve. So the stock market, this is just a quick shot, and I'll start to speed up through these slides. If you look from January 1 to February on the far left-hand side here, the stock market performed quite well. And it was really a charge by technology. And you can see of all things, utilities came in next. The S&P was 508. So it was a positive return, really led by technology. And then you can see what happened with COVID. Prices dropped. They did not drop evenly. And some of the places that you would think did real well, which is staples. Those are consumer staples. Those are like the Procter & Gamble's of the world and Kimberly-Clark's, diapers, shampoo, soap, those and razors, those items in general. Healthcare does too, because people still take their prescriptions, etc. And interesting enough that because of the way it went, or the pandemic, the way we were kind of self-quarantining, social distancing, communication stayed up and technology, when I say stayed up, they didn't drop nearly as far as financials, industrials, all the things we really weren't using at that time frame. In certain energy, I don't think there's a worse time for Russia and Saudi Arabia to get in a price war than when there's a pandemic and no one's using your product. So I don't think that was the wisest thing they've ever done. And then after that, the market really came back. It didn't come back evenly as well. Energy did come back quite well, but if you're down 52, almost 56%, 55.92, you have to come back more than 61 to be positive. Whereas technology didn't fall down as much, and then really led the charge back. You can see how much higher it was than the S&P. So it's really been kind of a tech run, and those large behemoth tech companies really have kind of ran away with this. So all sectors didn't fall evenly, nor came back evenly. So when people say the stock market's completely back, many sectors are still in what we would call correction mode, or down more than 10%. And then others have really raced up.
Okay, Brian, more to the point of how our funds are doing, and maybe actuarially, when do we get to the point of being fully funded for this liability? It's a big liability, and how close are we?
Sure. Yes. So it's for the most part, that's the actuary dictates those. I should say, does the calculations for those. You're pretty well funded. I believe it's like 2/3%, which is a very good funding ratio, where a lot of AAA general obligations are funded about maybe 25%. So we're a lot further along, but they are actually that Gadsby that I named before is putting it out really at a essentially a 30-year calculation to get there. I think this one is what, 2034, so I think it's like 23 years out that they're expecting you to meet your liability, and I think that you'll meet it quite handily. So I've already covered this one this is the earnings, and this is essentially when I look at those light blue, when we see the stock market's down, it's really those light blue bars. Are we going to get the earnings that we anticipate? Because right now that first blue bar we're not getting. I can fast forward to the other ones are about the economy. I was just going to tie it into municipalities. I can do that at the end if we have questions on it. And I'll go to the returns of the portfolio.
Thank you.
So
Page
okay, we'll
11.
stop at this real quick because this
Here we
is
go, yeah.
when we said we were balanced. What we do, because we have an investment policy statement and we talk about fiduciaries, both your side and our side, ends up being a pretty important page. Really just that far right-hand column. The far left is for us is what we're investing in. To your point of whether you say, okay, what should we own or not, really does, I should say it's important to know that we have the stock bond mix we do. What assets we're holding at any time frame isn't as important to the board, or I should say isn't as necessary for the board to know, to dive into. It's really, are we investing in what we should overall to make that investment policy range in line? And then are we, because that's what essentially we'll hold to, are we within policy? And if we're not within policy, I better have a really darn good reason, like we just added a contribution to the portfolio, so I'm heavier in cash or fixed income, or I just rebalanced and then the market tanked or something like that. So you can see as they line up, I said we're 55-45 overall, and we are 55.5, 43.2, and 1.3. So we're pretty well right on the tax, if you will, within policy, and that's certainly what we aim to be.
Good.
And that's what we should produce at each time we come, because we want to make sure that we're, again, in line and standard. So how's the portfolio done? Normally, when I come in, people say, okay, we all give me the news. How are we doing? For my 1 year number, given everything's happened in year to date. We know how good of the last 3 months it's been, because it was really a March story when most of the pain was there, and then assets came back. You can see for the last 3 months, we've yielded over 9.5 or returned that 8.67. And the interesting part is it's been coming from fixed income and equity. So fixed income, and so the bottom line for us is the top line. So the total fund is how the portfolio is done. And then the equity is contributed from that next 3 months. It's 1097, and the fixed income is 554. Now we came into this year with essentially rates at about 2 to 2.4% on something kind of short and mid range. So getting a 5.5% return, or double what yields are, you can see how much it's a bond rally, or how much yields have really dropped over the 1 year time frame, factoring in some growth in everything that's happened this year. Portfolio is 6.95. I don't want to skip over the year to date. It's actually positive through July, and we've had more positive returns essentially through the month of August as well. So it's really only tacked some on, but you're actually positive with everything that transpired in a balanced portfolio to this point. And then the 5 and the since inception number are positive, obviously, given what's going on here. You're in the kind of that 5 to 6 range, and also essentially within right around where the discount rate has been established. Behind that's the portfolio, and normally I kind of say, what we do in the front is kind of our pie chart, if you will, with a compliance page, and performance is the taste, and these are all my ingredients. We like everything in the portfolio. We don't fall in love with anything, because we want to be able to sell it if we don't think that if we think it's actually not doing well or doing too well. And I would state that when we're looking at funds, too many people look at the Morningstar page and say, I want all the 5-star funds, and what we say to that a lot of times is it's easy and it's neat to say, but if you try to buy stocks when they're on sale, and we kind of buy bonds when we're cheap, why would we buy bonds when mutual funds when they're expensive, or when they're on the list of the 5-star? So we'll take some 5s, but we're essentially somewhat agnostic to what star or what magazine they're in, because we want to make sure they fit in our allocation that seeks to be high quality and have downside protection through markets across the board. We want to grow, but we want to protect the assets first and foremost. And I I think that aligns usually with most boards' philosophies. And I would say that more funds than not that leave our portfolios is because of sometimes outperformance versus underperformance. And a quick anecdote I'll tell you is that I think one of the last ones we let go was a floating rate fund. And so essentially we wanted to make sure, because it's fixed income, but it's it's kind of a more risky spot in fixed income where bank loans are. We wanted to make sure that we had a more conservative play there. And the portfolio manager we had did a good job through some tough times. And then they started doing really well. And what happened was, because they did such a good job in tough times, so many more people, they gained so many more investors that their success made them larger, and they had to buy more bonds that just came into the market as opposed to being picky and choosy on the ones that they would have really liked to get. So their returns really ran up, and we went to them and said, "You doing anything different?" And they said, "No." And then we analyzed them and said, "Sure, they're a lot larger. They have to buy everything that's in here, and they're not the same fund that we really analyzed in the first place." So we let them go and replace them with the Pioneer fund that's in the portfolio. And what we do, and that was the whole reason for it, their success, because, if you get too successful, you're not doing the same things you were doing before. You have to analyze everything a little different. So these are all the securities in there. Again,
Did I move too fast for you? Sorry.
No, that's fine. As I said, it's one of those, I'm happy to talk about any asset class or anything in the portfolio, but it's really what they're doing here is we start out and we look at all the asset classes that are really out there in the universe. And then we look at them through long periods of time, really good periods, bad periods, really tumultuous ones that go through time, and then all the things in between. And we start saying, all right, before we're going to add an asset class, is it going to lower the risk? If it lowers the risk, then we can put it in, and then does it also help the return? If it does both of those, we'll keep on adding, and that's why you put those asset classes in. It's not just to be fancy and hope that they're going to react that way, but all we have is really history to go by. I wish I could tell you what the next shoe to drop or the next item is going to be. I certainly wasn't going to pick COVID if you were talking a year ago that this was going to be the one that was going to take us down. I had a lot of people telling me what they thought it was. Not one of us, myself included, thought it was going to be this one. But the portfolio reacted fairly strongly to it. We think we did well through it, and we're situated to have a strong portfolio should things turn more like March, or whether they turn more like April and May were.
So Brian and Barbara, in the chat room, a couple of members were asking some questions, and I posted it in there. So just to confirm, we're paying, I think it's like the $43.82 a year in terms of fees. Brenda receives monthly statements, which has gains and losses and has a breakdown of the various portfolio. Am I right?
Yes, and there's two different things to think about when you look at the monthly statement. When it reflects gains and losses, that is actually just the difference between what we bought and sold a fund for. What you really want to look for is more, what is the market value change? Because that's more reflective of how the monies have been earning. Where a gain and loss, it's not telling you how long we've owned the fund. So it's really more for when you're trying to think about performance, really the change in market value, which is on the summary page. And then, Brenda, I'd be happy the next time you get a statement, give me a call and I'll be happy to walk you through it, just to give you a little bit more color on that.
Okay.
And what we may do, as I said earlier, is that there's been we've had the finance committee is digging into it, so some of the council members may have some questions. So we'll start with Brenda, but I think at the next, the finance meeting is going to ask probably some additional questions. So to your point, Barbara, maybe not only just to Brenda, but to have some of our council members. So what's the difference between now and last year is that there is a finance audit committee. The members are much more deeply involved in understanding the budget and some of this very items. A little bit, we can't be doing it necessarily having 3 hours for today, but certainly to have some additional council members to be educated and to be updated to ask questions along the way. So we'll start with Brenda, and then perhaps Brenda, when the statements come in, we can just forward those onto the finance committee.
No problem.
And would it help to have us zoom in for a finance committee meeting to answer the questions of the small group at some point?
That would be great.
We're happy to do it.
Yep, absolutely.
Mary, are we gonna open it up to any more questions?
Yes, we should.
Okay, well, I'll start. I've got a couple. So my question for Barbara O'Brien is the market value change that we've experienced similar to other entities that would be comparable to us?
Yes, is the quick answer. Yeah, and so if we're talking about municipalities that invest in, that have OPEB plans,
Mm-hmm.
I would say yes. I would say the majority of them that have been established for a good long time, or in some of the pools, et cetera, have been more volatile because those have more equity exposure because they have what I would say lower funded ratios. So they have to be more aggressive. So I would say that this portfolio has, for comparable, meaning balanced portfolios, similar, but for overall OPEB plans, because they're, I would say, more in their infancy and I don't see infancy number, adolescence of their funding ratio and how much they're funded, that they have tend to be more aggressive. So those plans would have experienced more volatility than yours.
Okay, great. And one more question. Do you tailor our portfolio, or are all of the municipalities that you manage kind of in the same funding or formulas?
Yeah, so OPEB funds or municipalities or collaborative, whatever the agencies would hold similar assets that have similar risk return profiles. And what I mean by that is similar plan structures. So if you have your funding ratio is higher, you don't have to be as aggressive. So therefore, if you're balanced, you would own similar assets to other plans that have similar investment objectives.
Great, thank you very much. Those are my questions. Anybody else have questions for Barbara or Brian?
I just have one, just out of curiosity, Brian or Barbara. Brian, you just mentioned the OPEB profile. Are the assumed rate of returns for OPEB portfolios similar to that of pensions, or are they more aggressive or less aggressive? Because they're, as you mentioned, they're newer. They're.
Yeah. So. Oh, sorry. Let me finish.
Yeah. Sorry.
So pensions in the discount rate is established is a little different because the pensions tend to use essentially a discount curve, and so that's why they use what they call LDI investment, a liability driven investment, where they start saying, as you get closer to your funding status, we're going to take you from a higher portion of equity to a more fixed income portfolio, so you can line up with the risks of your assets. So they tend to, when they get fully funded, they essentially hold like 30-year bonds and strips, because that's how their liability is moving, almost like a bank or an insurance company would. And for OPEB, instead, they've decided to use a single discount number that they bring back your whole liability with it. And as I previously mentioned, it used to just be the expected long-term return of your assets. And if you weren't investing, there was a cash floor. Now they're saying for where you have assets that offset your liability, we'll use that long-term expected return. Where you haven't yet funded, we're going to give you a lower, almost like a bond interest rate. It's a 20-year municipal, but essentially a bond interest rate. So again, they hamstrung everybody a little bit, but it's definitely a different calculation. And so therefore, when I was saying you get more bond-like in the pension world, in the OPEB world, you have to maintain whatever the objective that matches the discount rate that the actuary is going to create. So if they say, hey, you're going to be a 6% discount rate, Now, we're earning that right now. We would have to say, you know, and if the long-term expected return of this portfolio is somewhere around there, we would have to stay with this objective in order to ascertain that number. That's why you can't just say, hey, we're real close, let's get more conservative. You'd like to do that, but if they do it, they're gonna recalibrate the whole formula.
Thank you.
You know? Thanks for
And
the
then,
question.
did a question come in to explain the difference between the cost and the market value on this page? Okay, so this goes back to what I said when you're looking at the statement. So your total cost is what we paid for that fund on any particular date. So for instance, on that very first one there, we paid $17,841. And then, of course, I picked one with a loss. And then the market value as of July 31st was actually $16,672. So if you go over to the column for unrealized gains and loss, there's a loss reflected there. And that's just the difference between what we paid for it and what the current value is.
Oh, sure, you couldn't pick out one that's up, huh?
Sorry.
I'm just kidding with everybody. We got to own all the pieces of it.
Yeah, but if you look at the bottom line does show an unrealized gain.
So as you, thanks to Brian and to Barbara, it obviously is a conversation that can't necessarily be just captured in a half hour, or even at this point, almost an hour.
I know.
45 minutes.
Sorry.
But it is something that the council members, and through the finance committee and perhaps other council members, will continue to keep asking questions and appreciate the time coming in today.
And if you need us to come back in before a year is up because you have more questions or whatever, we are happy to do this
Great.
at any time.
Yep.
So please feel free to reach out to me.
So what we'll be doing is since we're recording, we'll get this out to some of the other members who weren't able to attend today. We'll ask for questions, additional questions. We'll capture them into one, so you're not getting them one at a time. And then we'll capture those and then send them along.
Perfect.
So you guys aren't aging at all. What's the secret?
Hey, David, how are you?
Good, good.
It's all
Good
those
to
up
see you.
markets, I guess, huh?
Yeah.
Well, Brian and Barbara, thank you so much for joining us and your presentation. We really appreciate you making the time to
You are very
explain
welcome.
this
Thank you so much
to
for
us.
Thank you for having us.
Thank
Stay safe,
you.
everybody,
Thank you
and
so
enjoy the
much.
rest of summer.
All right. Good
Thank you.
night.
All right, take
Thank
care.
you.
Night.
Okay, back to business. All right, so we are on minutes of July 29th, 2020. Did everyone get a chance to read the minutes?
Yep. Yep.
All right. Any questions or comments? All right, seeing none. All right, do we have a motion to accept the minutes from the July 29th meeting as printed?
I'll motion Whitman.
Okay.
I'll second it, Brockton.
Okay, Bob is a second. All right, so we have a motion and a second. Sandra, you ready for some roll call vote?
I unmute myself.
Okay.
Okay.
All right, this is to accept the minutes.
Right. Okay, Abington. Avon. Is Avon still with us?
Frank is on.
He might be muted.
He is muted.
Yep, hang on. Let me, give me 1 second, everybody. Let me unmute everyone. Mute. Okay. Unmute. I know he's there. I just unmuted, so let me, oh geez, hold on. I gotta go into Eldon's room.
Oh my God.
This is a riot.
Poor Eldon.
I'm not sure. I'm not muted now.
No whispering, no whispering.
I am trying to, so if you get a message, I'm trying to, I apologize to everybody.
He's unmuted now. We can hear
Okay.
you.
All right. If everybody can unmute themselves, that would be great. Sandy, why don't you go ahead?
All right, I'll start back over. Abington, Avon. And this is to accept the minutes if you didn't hear. Bridgewater, yes. Brockton,
Brockton, yes.
Duxbury, not available. East Bridgewater, not here. Easton,
Yes.
Halifax, not here. Hanover. Hanson, Kingston, Pembroke, Plymouth, Plimpton,
Accept.
Stoughton. I hear something from Stoughton, but I'm not sure if I'm hearing them.
Oh, accept, sorry.
Okay. West Bridgewater and Whitman.
Accept.
Okay, very good.
So
All right.
just because I'm here, I mean, I know Frank Frank Staffier is on and I've tried to unmute him.
He just looks like he just fell off.
I think he's, yeah, because he was on the phone. I think he's gone. He was disconnected. All right, so we're now on to the financial reports from July of 2020. So I think Mary's probably going to drive and Brenda, you're going to present?
Yep, I'm here.
Okay, perfect.
Okay. Statement of expenditures.
Okay.
Right?
Yep, so here we go. Okay, the July statement of expenditures shows that our total expenses for the month of July were $139,134.08. And that's that really for this report. Everything else is just things that lead up to that number. Next is cash position, Mary.
This is Frank Staffier. Hold on. Hi, Frank. I know, I tried to unmute you. Do you want me to just put you on speakerphone here and you can listen in? Okay, hang on one second, everybody. Are you there? Oh, hang on, let me see. Are you there now? Are you there now? Frank? Frank? Okay, I don't know how to do this. There, are you there? Yeah. Okay, sorry. Frank is on speakerphone with me in my office, so. Okay. I don't want to say anything, but I got better seats from Did you guys hear that?
No,
No.
when you pick up the computer, I think you cover the mic. You don't.
Okay, hang on
you
one
don't
second.
realize it, but that's what happens.
He just said he's got better seats from he got for Bob Uecker than what he's got here. So I bear with me. This is as best as we can do right now.
Yeah,
So
yeah.
okay. Thank you for your patience, everyone. All right, Brenda.
Okay, continuing with the July cash position.
Yes.
Shows that we had a total income in July of $334,258.09. The total disbursements in July were $358,975.54. Total cash available at the end of July was $1,298,514.41. OPEB had a gain in July of $29,461.58 for an ending balance of $733,373.01. Okay, that's it for the cash position report. Next up is budget resources. Okay, budget resources for the first month of FY21 shows the income received in July, which is broken down into programs. $68,467 was for FY21 grants and programs. $265,791.42 was for FY20 grants and programs.
Brenda, sorry, I'm lost you. Where are we?
That's okay.
Below.
Yeah, we'll go down.
Sorry.
Okay,
Okay,
right there, 252, there's the number,
thank you.
which brings the total amount received in July, and this is the remaining total at the running total at the bottom. Which brings the total amount received in July to $334,258.09. And that's it for the budget resources. And next up is AAA. Now the AAA report, the numbers on the AAA report are not 100% accurate because next month I need to break these, I need to break the numbers out into to show the portion that belongs to FFCRA and CARES. Right now, everything is totaled into one giant number. And also, the current billings are not complete for June. I don't have everything for June just yet, but for next month, I'll have all those because I have to send the trial balance to the auditor by the end of this month, so those numbers need to be in there. So that said, the AAA report shows the budget amounts that have now increased due to the FFCRA and CARES funds. It should be noted that the current billings column does not yet reflect all of FY20, as I just said. The current cumulative billings through May and partially June shows a total of $962,930.79. And that's about it for the AAA. The numbers look excellent because of all of the CARES and FFCRA money. Next month, again, I'll break it out into it'll be separated so you can see what the different funds are doing.
Brenda,
Yes,
may I interrupt you, please?
sure.
So do you have to identify what each thing is that you spent for? Like, I know the government sent us something saying A through whatever had to be identified in certain categories.
I don't understand your question. You mean for like the care? You mean for like the money that we received for CARES and the money that received for FFCRA?
For the CARES Act.
Absolutely. There's an amounts are designated to specific programs, and those numbers will be reflected in the next month's report because all of the separate sections, the 3B, the 3C, 3E, 3D, all of those different programs have a designated amount of money of CARES and FFCRA that has to go to that program. So yes, they are designated into categories.
Okay, because I know that they will come back and audit you on those. And if you don't have them broken out, it just means you'll have to go back and, identify them in the different categories.
Yeah, we're tracking all that in QuickBooks very carefully.
I was just going to say, besides that, David Klein is on probably weekly phone calls with the state and others, and it's very, very detailed. But just a quick 2 seconds, David.
Yeah, just Sandra, just for your, like Brenda said, she's going to break them down further, but just looking at this current chart over to the left where it says Title 3B, that's supportive services, Title 3C are nutrition services.
Yep.
There's no CARES Act money in Title 3D, but Title 3E is caregiver services.
Okay.
So even by its very nature, we're keeping track because it's kind of preset categories that are being used.
Okay, I just wanted to make sure that we didn't get caught where then all of a sudden you had to go in and redo everything and categorize it because that's what they're going to be looking for.
Yep, thank you.
Okay, next up is the ROM statement report.
Are we doing this one?
Yeah. Well, yeah. No, I think just pull up the. I think you just pull up the spreadsheet. Yeah, here we go. Ooh, I can't quite see that.
Hang on.
It's really little.
Hang on.
That's okay. I do have a hard copy here.
Here.
Okay. Okay, now, everyone, I've updated this report for FY21, so it's a little bit more clear for everyone. The money going out, the expenses are all in red, which is in the middle under expenses. The money, the income coming in is shown at the top. This report 100% reflects the bank statement details. The totals, the cumulative totals all the way to the right, that is the totals coming across. So for instance, Columbia Gas, 1980 was received in July. Next month, whatever the amount is received will then total in the cumulative total. So that's what there was some confusion with those total columns. So I've renamed them cumulative and color coded the expenses and the income. So hopefully that's easier for everyone to understand. The adjustments come about because, again, we're working off of a bank statement. And as you know, we're looking at the expenses that we spent out in ROM in July. However, the bank statement may have things that were received in July that were paid 2 months ago. So I have to make an adjustment to show that money in order to make this balance and match the bank statement. So that's where the adjustments come into play. If you go down a little bit, Mary.
Yep, it's as much as, that's.
It's down as much as it goes. I'm sorry, I'm used to looking at the whole year's worth. So at that little square at the very bottom, notes related to adjustments, any deposits that are outstanding, sometimes the deposit, because we may have a late month meeting, so the deposit for the following month may go in this month because that's just when the meeting occurs. So that would be an outstanding deposit, which would go there. And prior month's payments that were received in July also go here, which brings us to a bottom total of an adjustment, which then goes up into the adjustments column, which lands under monthly total expenses. And then when you add the adjustments in there, the ending balance of this spreadsheet will match the bank balance.
Yeah.
So, but I think the important thing that we're looking at with this report are everyone wants to know what expenses ROM actually spent in the month of July, which is just right there. All the other stuff is just in order to balance to the statement. So does everybody understand that? No questions? Okay.
And just, I think just on this one, just a thanks to the council members from the last meeting as well as the finance meeting to reword some of the things that may have led to some misunderstanding. So thank you to Brenda for adjusting, and I think this should be clear.
I think that it's better. That was helpful. That was helpful because this is actually better.
So are you getting any reimbursement for balancing their books here? Are you?
Yeah, I'll put that in the suggestion box. Mom needs to give Brenda a raise.
We are doing their books. So you don't get paid anything, or they don't contribute to your salary through.
No.
I think for the next
that way.
So for my suggestion is that for the next for the next finance meeting, there's a couple suggestions that I think I would like to make. But for right now, in terms of Brenda's time, my time, and other, even Charlie's time when we talk about ROM, how that may be adjusted. So.
Okay.
All right. So that's it. That's it for the finance report, guys.
Well, you have, and then the checks that have been written, this is just, we usually have those as it's kind of hard to see, 200, sorry.
It's a little.
I know. Anyway.
Okay, that's much better.
These are the listing, it's in the material that was sent in the documents sent to you by way of email.
All right, any questions for Brenda on the July financials?
Nope.
All right, do we have a motion to accept the financial report from Brenda?
So moved.
All right.
Second by Whitman.
Okay, so we've got a motion and a second. I'm not sure who was who.
That was Dan.
Okay,
Whitman
Dan?
seconded it.
All
Yep.
I
right,
second
beautiful. So you guys were the same for the minutes. All right, so we have a motion and a second to accept the minutes or the financial reports from July. Sandra, can you do a roll call vote to accept the financial report?
Sure. Abington, A1.
Delegate.
To accept the financials report?
Yes, that was Frank. Could you hear him?
Bridgewater, yes. Brockton,
Yes, accept.
Duxbury, East Bridgewater, Easton,
Accept.
Halifax, Hanover, Hanson, Kingston, Pembroke, Plymouth, Plimpton,
Accept.
Stoughton,
Accept.
West Bridgewater,
Accept.
and Whitman.
Accept.
Thank you.
Great, thank you. Okay, Mary, on to staff report.
Yes, thank you very much. I have, so this was sent to everybody. Just to highlight, I'm actually going to ask Dottie Buginetti to just step in a little bit. But there's really, again, just amazing work that's being done. It's almost not enough time to go through it. Please take a look at this, just from housing production plans to open space, from the Community Planning and Economic Development Department. You know, there's some projects that have been completed in East Bridgewater. We're figuring with all the work in East Bridgewater, we got to get a delegate out of them, right?
Yes.
Yes, we do.
Right, I'm like, I'm trying, but obviously the Green Communities programs. So I am actually going to, Dottie, am I going to share the screen with you?
I think I can share the screen.
Or do you want me to bring up your report? Actually, let me just bring up your report. I have it here.
Okay.
So give me 1 second. So obviously Dottie started in July and here it is August and so much work has been done. But Dottie, why don't you walk through your report and then we can bring up that draft that we chatted about earlier.
Sure. So thanks for inviting me to the council meeting tonight. I'm very excited to be here. It's been a really busy month, very exciting. Love to wake up and work every day with all the fun things going on. So with Stoughton, we gave them some assistance on their MassWorks grant application, including a letter of support, but some other advice and coaching back and forth and some data and statistics to help support that. And they're going to be applying for an EDA grant for their same project. So we're kind of getting prepped with that. With Avon, the same thing. They're applying for a MassWorks grant. We coached them, did help with some mapping and some data for their application. They're also going to be looking to do an EDA grant or two. So now that MassWorks is going to be over, submitted by tomorrow or Friday, we'll be working the next steps on getting their EDA grants in order. Brockton, we've been doing some prep work. They're looking at doing an innovation center for an EDA grant in collaboration with the Brockton Center for Women in Enterprise. We're also talking about helping with a business directory. We've sent them a lot of IT grant information. And Hanson speaking with their planner about some of the ideas that they want to do in their town. I've been leading a strategic clarity program with our staff to talk about how to really clarify what we are looking at for a strategy and how to execute that. So we've had about 6 of us brainstorming every Wednesday coming in to do that. It's been really thrilling, I would have to say. The communication is amazing and really learning about each other and what we feel we should be focusing on. I did a small business 1-pager, so we're just waiting for the final proofread on that. I worked on a document. One of the biggest questions that I was getting from people as we started was, how do you even start with grants.gov? You know, from what is a SAM account and how do you figure out these numbers? So I tried to put in layman's terms, you know, step 1, step 2, step 3 type of a thing. So I have that out to a couple of members to kind of look through it for people that have already gone through the process to see, am I on track or am I missing anything? Working with Joanne on the Salesforce database, we're making great progress on that. And every week we meet with the Brockton Mayor for Economic Development discussions and his team. And then I just put a couple of grants.
Wait a minute, we're meeting with the mayor every week on economic development?
Yes. Yep.
Oh,
Oh,
come on. That's good. And Dottie, I would say, I was at the council yesterday and I took a picture of what I think you're working on, the Achieving Strategic Clarity. It looks like a pretty good initiative. So congratulations and good luck on that. Good work with that. Then the question about the Salesforce database, what is happening with that? Because I use that actually.
Well, we didn't have a database before. The group was working off of spreadsheets with people's contact information. So we realized that not just from a contact management perspective, but also there are a lot of other things that we can keep track of in Salesforce. Either good or bad for you guys and for Mary, that Joanne and I are both technology geeks. We love this stuff. So we kind of team up on a lot of the technology. That was my background before. So we both know how to use Salesforce pretty extensively. So
Good.
once we get that in, it's going to be so much easier to manage the data. Right now, for me to look up, who are the people in, Plimpton, I have to take the spreadsheet and sort it and look across columns, whereas we could be putting notes like, I talked to Christine today and here's what we talked about, so that all of our different departments aren't as siloed. They'll be able to work together, saying, who's working in Hanson this week and who's working on what kind of a project. So it's going to be a real collaboration tool for us too.
Good.
And so Dottie, these are some of the things that Dottie's been working on, the food and food security, and just also, again, real estate technical assistance. So this is, I'm not sure whether I sent this or not, but I'd actually, just because I know that we're running a little bit short on time, I will send this out, but there's one more piece that I want to share. Give me 1 second. This is a draft business guide that Dottie she has some tweaks to it, still being edited. But as you can see, this is going to be really informative. It will be sent out to you as delegates to then share with your communities. And Dottie, do you want to just quickly walk through this?
Sure. So it started off, I was calling it a 1-pager, but it turned into a 2-pager front and back. So it's a 4-pager now. But one of the things that I heard when I've been talking to communities is there's not one place that they can go to get information about, like, a high-level overview of what's available for them. And in layman's terms, small businesses are super busy. They don't have time to go through the SBA website and figure out, what does this mean? What is the PPP and the PPE and all these acronyms? So I try to, kind of make it simple, and we'll see what kind of feedback we get. And then we can kind of use this as a baseline and tweak it as we go along. Once we get the new website up and running, this information will be on the economic development part of the portal, so that people will be able to have access to more up to the minute. A lot of these programs are changing quickly, so we want to make sure that we can adapt to it.
So we'll get that sent out to you. I'll just scroll quickly. There'll be a contact. It'll be through social media. Again, really inclusive, and it will be, as Dottie said, it will be constantly updated. Again, within a month, Dottie's proven weight and her value, it's just been amazing. So what I liked, Dottie, thank you. I appreciate, I know I didn't do you justice in terms of all the things that are being done. I did want to highlight a couple of things in terms of transportation. Obviously, Charlie's work has been incredible. I know I say that to you every time. We're all undergoing a bio about each of the staff and many of the things that we are doing. And I asked Joanne to send me along Charlie's bio that he created. It's amazing. I'm going to share that with all of you. The idea is that really kind of focusing on our staff, the resources that are within these walls, to the communities, are just amazing. So many of you know that already if you're on the MPO or JTC, but we really are coming together. Charlie almost every day says, Mary, we're gonna get there. And having Charlie as not only the transportation project manager, but to have him as the assistant director is incredible. So he really has led the staff in terms of, it's his 2 staff members that Dottie's going to join in terms of the diversity and civil rights, in terms of the reflection, opportunity, and actions, which really cultivates the Title VI and others. Continues to be meeting with on Brockton in the Main Street quarter and the 139 Route 139, the pavement management system in terms of looking at software that can be updated, that can be really resourceful to the communities. His staff looks at the MEPA environmental review. There's the webinars that they've been attending. South Shore Chamber, he serves on their advisory transportation group, which is an amazing piece. So then Charlie's able to see what others are doing and bringing it back. I mean, just so many things that are underway. These are projects that are certainly underway. Talked about the Main Street quarter, that there will be a virtual public meeting held on September 9th. Flyer is just about ready. We'll get that out to the members to attend, Bob, and particularly you, and to Preston. And the one thing I want to just kind of what's under review right now is looking at drone and potentially purchasing one, and how we as OCPC can have that as a service to our communities. So that's just, we're doing cost estimates as it relates to that. Our GIS systems in terms of install and looking at different things in terms of the pandemic, looking at census, looking at where things are, looking at traffic count data, looking at AAA in terms of the region. The COVID-19, for those that are on the task force, continues to be going forward. Our office is starting to finally really look to get into place. I think it was asked the last time by Stephen, we're not moving in yet. We are utilizing the office very sparingly and as needed, and we will continue to do that until we are able to then have us fully all the things that are needed within the agency. Obviously, the area agency on aging, and David and Lila together along with Jane from the office, and I did share this piece with you. There is the Ombudsman Corner, and I will not do it justice because of keeping the 14 volunteers engaged and continue to be out with the nursing homes, seeing where the families are, continues to be there, utilizing the newsletter to get word out. David, in terms of the corners of Old Colony, AAA, we talked about it quickly within the budget aspect of things and what you're doing, the COVID and CARES Act, as well as the ongoing support and working with the Old Colony Elder Services. Please take a closer look at this report. I'm going to stop myself because it will continue the septic program. So let me stop there and we'll send that out. So apologies for going over. On the agenda, sorry, I just want to go back to the agenda. So that's staff report.
Thank you, Mary and Dottie and Charlie and everybody, David, all the team. You guys are doing some amazing work. It's crazy, everything you're getting done in this COVID environment. So thank you all so much to hear all these, the great work you're doing. Thank you, thank you. All right, so regional clearinghouse reviews.
So we have under the environmental notification. So the nice part about this is it's part of the agenda, so I can go right to it. So I did send this out separately to Stephen, who wasn't able to be here. He's on vacation this week, just so he's aware. Again, this is under the MEPA review about Cantina Way. So in terms of, this was on the agenda, so I'm sure you read about it, but that this is before MEPA. It is just for a notification and no vote is required. And just as an aside, the Easton Depot Street project had received certification. It's a grammatical error there. So those are the two environmental reports that we have.
Great. Okay. Mary, do you have an update on the retirement legislation?
Just that the legislation is, we've continued to bring up to speed, there has been a lobbyist that's been hired on our behalf to keep an eye on the legislation. I'm still anticipating that the legislation is not going anywhere. We did receive communication again from the State Board of Retirement reminding us that we have a payment due, but it's all pending upon legislation. So at that point, that's the report on the status of the retirement legislation.
Great. Okay, new business. Bob, do you have a report from the Personnel Subcommittee?
I do, and I'll make it short. And just to update folks, the Personnel Subcommittee met on a couple of times, and most recently Monday night. And we went over, we had circulated a person, like an evaluation for the executive director, for Mary. It's not typical that somebody wants an evaluation in their first 6 months, but this has not been a typical 6 months. And so we were able to get feedback from the 7 members, 7 delegates, and we kind of compiled our results of our feedback all together and talked it through and agreed that it was, absolutely an excellent evaluation. And I was happy to meet with Mary yesterday. We met in person, which is good. It's the first time I've done an in-person meeting in a while. So I came into the council and we sat in the new expanded conference room. We saw the new carpets in the building and cleaned up nice. And we went over it, and I have the report, and we covered leadership, management, communication, the extent to which the director communicates with the council, staff, and other agencies. Obviously, there's more. I think there's better communication than we've seen in a long time, perhaps ever, with the delegates. Policy matters. This was probably the only area where, outside of outstanding and very good, Mary got a good. So, and the good was, the idea that transportation funding and transportation programming is a big part of the council. And Mary came to this with knowing that, that was going to be a big learning curve. And I think it's still true. She's shown great progress, and I'm sure that will continue. Staff development, I think the staff understands that this is, Mary's a different director, a new director, a new tone, a new culture. There seems to be accountability and motivation and communication. It's all been extremely good. The budget does an excellent job with the budget. Secured a large amount of CARES funding. Has a good sense for the revenue of the council, and then the last 2 were about relationships interpersonal between the director and the staff, and also between the council and the communities. And again, everything was high marks with excellent comments. And if anyone in the delegates wants a copy of the evaluation, just let me know. So that would conclude report, unless there's any questions.
Any questions for Bob on the director's review? All right, thank you. Thank you, Bob, and thank you, Mary, very much for
Mary, yes.
the amazing work you've done. Yeah, thank you, Charlie.
Yeah, Charlie clapping.
He's clapping, yeah, yay!
Excellent.
Thank you, Bob. All right, on to community concerns. Do we have any? Anybody have any community concerns? Okay, other business?
Nope.
Nothing, Mary?
No.
Okay. All right, we don't have any visitors, but any final questions or comments? All right. Well, our next meeting will be September 30th at 7 p.m. And if we don't have any more business, I'll make a motion to adjourn. Do we have a second?
Whitman will second.
All right, Dan second.
There you go.
So motion and a second. So thank you all so much for coming. Another
right.
great meeting.
Thanks. So.
Have a wonderful rest of this month, week, and we'll see you in September.
See you in September.
All right, good night.